Alright, what's up guys? This is Max here, aka Madass with WatchMadassTrade.com. Good afternoon. Finally got a chance to make a video during normal hours where you guys can actually watch it as opposed to doing it late in the day. Fortunately, I actually have time in my hands today, so I'm gonna make a really quick video. I've been wanting to make a video on this topic for a while. Pretty much this video is about understanding the risks of trading stocks when they're trading very low volume during periods of lull. So I just want to illustrate this concept because I feel like it's very important. It will prevent you from making very forced trades, very irrational decisions, and definitely it's a very good key concept to understand. So this is a good example. I finally got a good example today. That's why I'm making the video today. So the example today I'm going to use is MBLY. This was a stock that IPO'd on Friday, had a really nice move, looked promising pre-market, and it just started fading out, and not only in terms of price but also volume as well. And the key thing here is volume. The one thing I want to focus on is volume. So right now you see on the chart, this is a clip from today's live trading session. Now you see in the clip that the bottom end of this channel on MBLY currently is $40, top end about 40.5. So we got a 50-cent channel, but the volume is extremely low, trading about 30 to 50,000 shares every minute. This is a 1-minute chart. So I'm going to go ahead and play the video, and it'll be pretty much self-explanatory, and you'll see exactly what I'm trying to point out. So like I said, right now MBLY trading in a channel between 40 and 40.5 for about the last 30 minutes. This is a 1-minute chart, like I said, a little bit different than what I normally use, which is a 3-minute chart, because this stock doesn't have that much chart history as it is only the second day of its trading. So let's go ahead and observe. Look at that. Did you guys just catch that? I hope you didn't blink, because if you did, you would have been down a quick 70-80 cents per share. Obviously not a pleasant sight to see if you were long the stock. Now a lot of you probably would have bought that 40 thinking, hey, you know, I'm going to buy the 40 lower end of the channel, ride it back up to 40.5 for a nice quick 50 cents per share gain. Well, when you're trading on a stock with low volume, this is exactly what could happen. So right now you do see me take advantage of the low wash share. They're a very small position, only 250 shares. As I can tell, the stock trades on very low volume. Don't want to risk a large position, risking another big red candle. So I'm going to sell this immediate pop as it pops over 39.5. You see right here, just going to make a quick 50 bucks. Don't want to risk getting dumped on. But the whole point of this video is to understand why stocks, when they're trading low volume, when their liquidity is very low, it's susceptible, very susceptible to moves like this. All it takes is for one guy jump on the ass with a large position, or market order panic sell his position or whatever, and the market makers see that, they take out all the bids, they pull all the bids, they take out all the stops. I'm pretty sure there are a lot of stop losses around $40, and the stock takes a huge nosedive in a matter of seconds. Like you guys literally saw that. You could have blinked and missed it. So just shows you that it is not the best of ideas to trade during a stock when it has low volume. There's other stocks that are much more liquid, has trading with more volume. As they always say, follow the money, follow where the money is. Clearly the money is flowing out of MBLY and into other stocks. No reason for you guys to take a chance on a stock like this, and if you were, please do it with a small position. Just wanted to illustrate that, put it out there, make you guys aware of what happens when you could be trading, when you're trading a stock with low volume, low liquidity. Stops get taken out, and you'll see exactly what happens, as you just did at this 1019 candle here on the MBLY chart. So we did get a little bit of a retracement, but you do notice that the green volume is substantially lower relative to that red volume. You got, looks like 60,000 shares or something, and then 30,000 shares on this next candle, I believe. Nowhere even close to that 211,000 share candle. And mind you, this is a 1-minute chart, so who knows, maybe there was one guy that just dumped 200,000 shares, market sell, who knows. But either way, the price action got obliterated and you would have been down pretty bad there. So this is why I always suggest to stay away from stocks at low volume. I always suggest trade liquid stocks, stocks with good volume, allowing you to get in and out really quickly, stocks that won't dump on air. It's just, you know, it's pretty much just part of trading, kind of adjusting to what the market shows you. You know, MBLY was a solid stock in the morning, had good volume in the morning, but as you can see, the volume just disappeared at around 950. If you look at the chart around 950, the volume kind of just vanished, and that's when all the big money kind of flew out of this one and into other stocks. So I'm going to fast forward this clip a little bit because this stock actually did another move again, and you'll see pretty soon. So like I said, I did take advantage of that little washout, longed it a little bit, got rid of it really fast. Didn't want to risk a dump, maybe about 50 bucks, you know, better than nothing. It was an opportunity to buy for that instantaneous moment where the stock was slightly liquid. You know, they always say buy the fear, sell the cheers, and that's exactly what I did. Now I'm just going to play this clip a little bit more so you guys can observe there is another secondary dump, although not as violent, but nonetheless illustrates my point. The stock reverted back to trading very low volume after that huge red candle of 211,000 shares, and you'll see exactly what will come next. And if you guys do hear some sort of rumbling noise in the background, it is actually my AC running around in the background. It is pretty much 100 degrees here in Los Angeles today. Sweating my ass off sitting in this chair making this video for you guys, but you know, it's worth it. It's what I do, I love it. So here we go, we got a little fade. This isn't exactly the move yet, the volume is pretty low on this thing. But this is another nasty fade back down to the lows, fading about 50 cents so far. So some of you guys might be trying to buy maybe against that lower day for a long. And the reason why I would suggest against it, because like I said, the volume is low. I bought the previous dip because it dumped on 211,000 shares. That was a large volume candle relative to the other candles that were surrounding it, but this candle, not exactly that convincing, not that much panic. So I wouldn't expect any sort of decent bounce on this thing. You got a big ass there, Edge X. 25,000 shares, so this thing is definitely headed south. 61,000 shares on that red candle down move, not anywhere near that 211,000 shares, and that's why I didn't buy this dip. So you guys were curious why. I only buy high volume dumps because that would always somewhat have a better bounce because of the emotion that is involved in the panic. So the stock is now fading back to the lower days, and now you see what happens when it tests 39, and what happens when you try to, let's say you were to buy this 39 for a long, and let's see what would happen. Look at that. Flush, and you're down a nice 30 cents per share in 2 seconds. Stops got taken out, somebody dumped a lot of shares, and again, pretty much the stock did this 2 times in the last less than 10 minutes, it looks like. So, you know, like the expression goes, fool me once, shame on you, fool me twice, shame on me. So definitely you should not have been caught in this kind of move twice, but it is a very good textbook example of why you don't trade the stock when it's trading in low volume. Now I could have probably bought this for a bounce maybe here. Volume is sufficient on this candle, but you know, I opted not to do it. But could have been a nice little play here. But the whole point of this video again is to illustrate what happens when you trade a stock with low volume during a period of lull. Stuff like this can happen to you. If you're long, understand the risks. All it takes is for one guy to dump a position, market makers see that, they pull all the bids, and the stock drops a nice 30 cents, or in the case of the 1019 candle, 80 cents. So, you know, if you were in 1,000 shares, you'd be down 800 bucks in like 2 seconds. You know, you literally blink, and you miss. So that's the nature of how it works, and I just wanted to raise awareness of this out there. I know a lot of you guys, this question was asked in the chat room today in the live trading session as well, so I just wanted to point out there and bring it to you guys' attention so you guys understand what happens in this kind of scenario. Alright guys, so that's pretty much all I had. Just wanted to show this. Been waiting for a nice example, and we got one today. So good opportunity to make this video. And if you guys have any questions, more than welcome to email me at max@watchmadasstrade.com. Again, you're more than welcome to try out my live trading service, where I pretty much do this kind of screen share setup and live voiceover commentary, and I do answer your questions live in the session. This is an excerpt of my live trading session this morning actually, so this is pretty much what you would see, and on top of that you would hear me pretty much commentate on what I see and observe in the market. So try it out. It's $5 for 5 days, and if you don't like it, it's all good. And if you do, well, I love you even more. Alright guys, like I said, any questions, email me. Other than that, we'll see you guys next time.